The statistical downside setup we spoke of in last night's thread of analysis showed some accuracy in today's price action. While the downside is still in higher probability, I can see a potential support coming about in the horizon. Let's pop open the charts for a true edge over tomorrow's session. Welcome back to the channel on this Taco Tuesday. This is ARCa, and let's dive into ticker symbol STAL. Let's kill them, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol STAL, and we're observing here STAL on the 8-hour chart. And I did mean what I said, right, about the continuation to the downside of being a higher probability here. First of all, the 8-hour time frame has closed beneath the EMA 21, which is the 21-day exponential moving average. And you know, actually has used it as a validator too for confirmation. So yeah, we do still have some downside coming up, but I am seeing a potential support in the shorter time frame actually. Okay, so I'm keeping a close eye in well, here in the 8-hour time frame. I'm keeping a close eye on the SMA 200 and the EMA 55. Okay, so both of these moving averages are showing some potential there. Okay, but now I want to also point out the fact that we have a very strong support located right here at about 2062, where this 8-hour gap is located, right? So that bottom side could be a nice area to find support, right? The bottom side of the gap, we've sort of filled it, right? But yeah, we could come back down and touch down on that again. Now the thing is that in an 8-hour time frame, as you're falling, as you're using price action here for a downside, the stop losses can be triggered, and some panic sell can happen, right? So this is why I'm keeping a close eye on both of these moving averages down here. Now, if we move the time frame to 4 hours, then we're going to start to see something very curious here. So the 4-hour time frame, sure, broke down beneath the SMA 10 green line. Now we're breaking down beneath the EMA 21, and we're approaching the EMA 55, right? Good. The gap is still present there on the 4-hour time frame too. But I want you to notice this though. Okay, so it looks like we're about to get a golden cross, right? So that is going to be the SMA 50 crossing upside of the SMA 200, right? So that golden cross could be an area that we can use as a potential support. And I mean, as a price action can come down and validate it, right? So I want to keep an eye on that, right? Because the thing is that the 3-hour time frame, we got a golden cross here, right? We got a golden cross on the bi-hourly, of course, right down here, right? And of course the hourly. So now we're cascading the time frames upward, right? So, and as you can see here on the 6-hour time frame, it's also approaching the 8-hour time frame a little further away, but yes, still approaching and converging towards each other. And of course, the 12-hour and the daily are pretty far away, but they're still approaching each other, right? So this is why I'm thinking that we could get a 4-hour time frame validation of this crossover. So if it's not going to be the area of 2062, then we have to kind of keep an eye out here for the potentials of dropping down into the targets of around 2045. Okay, team, and let's see if that kind of matches the statistical setup too, right, for the downside probabilities, as it could very well be present, right? So let's see. So we were talking about, so we met the target today, right? Yesterday we spoke of the downside of what was it? The standard deviation? No, the average downside, which was the average breakdown of minus 54.57. Yeah, it definitely got met today, and that was also at the 1.618. So it shared the target here with the Fibonacci ratio. So that was nice. We definitely got it, and actually within the range too, right? Price action came down to 2 zeros and what was the low? 2 zeros and 6.8, and we were suggesting a total range of 2 zeros and 6.3 to 2 zeros and 7.4, right? So pretty accurate there. Now, The bottom side targets here, there isn't really a medium at this place, but if we were looking at price action here to this wick, sure, that's 2 zeros and 5 0. But it looks like statistically speaking, the lower bound of the first standard deviation being, let me see, yeah, being this here, that is actually displaying the targets of about 2 zeros and 3 4 and 2 zeros and 3 9. And looking at this, the SMA 50 is located at 2 zeros and 4 4. So, uh, that, I mean, maybe, right? It may be correlated to that in some way, shape, or form. So we can't ignore that. Let's just go ahead and, kind of appreciate that fact and move along as, just let's just take it step by step here, right? But you guys know that this downside has been coming. We already expected the downside too. Okay, so now another little piece of danger here that we are observing in well, I mean, we still have kind of an eternity to close this weekly time frame candle, but what I want to point out here is that if we zoom in, you'll notice here that the red candle is entirely engulfing the prior green one, right? So that is creating a bearish engulfing. I do think that if we get those support bottoms, right, this is another gap here, which is very similar to the gap that we've been pointing out on the 4 hour and 8 hour time frames. So if we are able to bounce from here and recover, the bearish engulfing, so that we invalidate it, that would be ideal here. So so that price action wouldn't have to continue down to this SMA 10 on the weekly, which is the golden cross number that we're looking at in the 4 hour, right? So I'm thinking that there could be a support there. We just have to be very careful as we proceed, okay? Volatility is actually contracting right now. And let's see. Let me just go ahead and take a look. Yeah, volatility. I mean, the thing is that volatility is still extremely expansive, right? It's at maximum expansion, meaning that there's a maximum amount of trades happening, right? So, and while that's at critical expansion and we're, on a downside pivot, we're quite literally hitting the gas on a downside, right? So we want to be careful when we're throttling toward on a downhill, right? So we want to be very, very, very careful of how we proceed from here. Okay, so and now to observe the last part of the analysis, there is a drive of hidden bearish divergence on a 30-minute time frame. In reality, I really like to look at divergences in the 8 hour and above, but it's showing up here on the algorithm, so we'll go ahead and just kind of acknowledge that it is there. And moving on to the bi-hourly time frame, it looks like we have just a little bit of consolidation here. Same situation with the 6 hour, same situation with the 12 hour. In fact, as we dive into the upper time frames, like the like the daily time frame, then we have that downside continuation. And not just any downside continuation, this on the buy daily shows that support and that potential area that we can use as a bounce. Right, so the distance between the RSI signal, which is the teal blue line, and the SMA 14 represented by the pink line, that distance here is what's making me determine those two targets, either 60, right, 2 zeros and 68 or something like that, or 2 zeros and 4 and 4 4 4 5, right around there. I'm thinking that could be in a very discretionary manner, right? Eyeballing it here, it could be that. And I do believe that there could be a pretty nice bounce from this area for two reasons. The SMA 14 is in the gravitational zone of the bear weakness percentile, and that means that we would come down here, pressure this SMA 14 slightly lower, right? And then we would actually bounce from not only the SMA 14, but from the gravitational zone as well. So 2 points of support before a continuation to the upside seems of higher probability here. Okay, team, so I know that I've had this listed up here, but please go ahead and get in touch with me, as this will be the last course I teach. And so it's a 16-week mentorship program. I've opened up another 30 seats from the 35 actually that just got taken for track number 3. Track number 4 students potentially start in January. And so definitely get enrolled, take advantage of the situation, get a nice start to the year, and become an ARCa Bulls trading team member. All right, so please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night. And I will catch you at the bell mañana. Adios.